we're still talking about the markets, and let's move right now to inflation data. Michael Ogunremi is joining me. He's from Chapel Hill, Denham. He's a macroeconomist and fixed income analyst. Hello, Michael, and welcome to you. A happy New Year. We haven't, have we? No, we haven't spoken this year. So, happy New Year to you, Michael. Are
Oh,
you
yeah.
there?
Yes, I am. Good morning, Nancy.
Good morning. Speak to me about if the December inflation data that came in at 15.63%, if it surprised you. I wasn't surprised. Were you surprised? Other analysts were shocked. Investment and research analysts were shocked with that data. But from where I'm seated, I was expecting it somehow. I don't know. I'm not a voodoo person, neither do I have a crystal ball, but that was what I was expecting. What about you?
Well, to be honest, I think the surprise is more in line with the direction, right? Our view before the report was released, was that yes, we might, see, we might still see a slowdown in December, but we might not, the gap would not be so much. So what we did was to cut down, our margin of expectation. But I mean, I think inflation rising to 15.63 beats, our own estimate in terms of, what the direction should be. So not completely a surprise, but I think in terms of the magnitude of the change, that's where, we fell short of. Yeah.
Why do you think that many analysts did? Why did you think that many analysts did not get that coming that inflation
I
data?
think
Yes,
it's
yes. Why didn't they get it?
I think it's quite clear. We've had inflation steadily decline in the last 8 months consecutively, and coming into December, the only concern for people will be that yes, we might see a little bit of spending, elevated spending because of the festivities. But our own view, is the fact that yes, it's very possible that suppliers, most likely, draw down on their existing inventories to meet, the elevated level of demand. But what we saw happened, is that the inventories, that we, presumed would be drawn down on, wasn't even enough to meet, the same level of demand that we saw in December. And so if you drill down into the number, what you will see is imported inflation contributed, much strongly, to inflation. And I think that was a missing puzzle, for most of the analysts, and that's why, quite, a lot of us, got it wrong on that note.
Okay, for the fact that we saw a rise in December, what do you think that triggered that rise? I know we have the data, but can you speak to me through the triggers?
Exactly. So, just like I said, if you look at the number, I think spotlight beams on imported inflation. Just like I said, our own assumption was that yes, we're definitely going to see quite, a leveled up, demand in December, and we think that, suppliers, manufacturers will most likely draw down on their existing inventories to meet demand. We also had the belief that it was still the harvest season in December, and we expect that food production, domestic food production, would also be supportive of this inflation. But in reality, what actually happened was the level of demand we saw, was quite elevated, such that there had to be, a rise in the level of imports coming into the country. And I think, by the time the Q4 trade report is released, that would attest, to this fact. So if you check, imported inflation, you notice, there was quite, a significant jump, about 0.05, zero point 0.5 percentage points, and that is, was what really triggered, the level of inflation that we saw. But it's also important, to pay attention to what happened, in the core inflation sub-index. And so you look at, four key components. Number one, education. The prices of educational services increased, and I think that's because schools were resuming, and then parents, were trying to pay in advance, for their children's resumption. You look at hotel and restaurant services, we had, quite an inch up in that area as well. And that is because, it's the festive season. Everybody wants to go out, spend money, enjoy themselves. And where else to do that other than hotels and restaurants? There is also, utilities, because, it was a holiday period, people were staying at home. They're definitely going to consume more utilities, more electricity, more water, and all of that. That also contributed, to the increase we saw, within, the core inflation sub-index. And I think the last one is clothing and footwears. And of course, I mean, that's quite intuitive. I mean, you want to buy new clothes. It's the festival period, so people are definitely going to spend more on it. So within the core inflation sub index, we saw those four items play out. And when you join that, with imported inflation, I mean, it paints, a very factual picture of why we had that jump in inflation in December.
You know, I think it would be right to say that Nigeria has an inflation problem. We're among the countries that have, I would not say very, 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 very high inflation rate, but high inflation rate, because we still have countries that have inflation in the excess of 20% and what have you. We shouldn't go to the likes of Venezuela and the likes of them. Even Zimbabwe at the time suffered from hyperinflation, where you could go to even the stores or the supermarkets and you don't see anything on the shelves. I don't think we've reached that level. Where we are right now is that goods are there, but they're very expensive. Will it be out of place that we are having high inflation compared to what the global economy is also suffering? Because globally, we're having an inflation problem. So is it out of place for Nigeria not to have inflation, high inflation?
Yeah.
Or our own is just local to us because of our own problems?
Yes, I mean, I couldn't agree more with you, Nancy. So globally, the economy is heated, and curiosity breeds, you want to find out why exactly, the whole global economy is heated. And I think it's self-explanatory. There was, a lockdown, 2 years ago. COVID, ravaged the entire global economy. And what you saw there was a lot of policy support. There was a lot of liquidity, that was flowing out, both from the monetary policy side and then from the fiscal policy side, to all sectors of the economy. So the market was awash with liquidity. When you have liquidity, you have a leveled up, demand, and that would definitely filter into the commodity markets, which is why we've seen global inflation, escalate, in the US and virtually most countries of the world. But when you come to Nigeria, I think the beautiful part is that, yes, quite right, we saw inflation in December, but I think it's important to note that we have recovered as far as, production and business activities is concerned. I think it's safe to say that even if we are not, at, the 2019 levels that we were before the pandemic struck, I think we're somewhat, very close to it at this time, considering the fact that, fiscal and monetary policy support has been, quite accretive, to the recovery that we've seen so far. So I wouldn't say that we have an inflation problem in Nigeria per se. I think the issue is we have quite a couple of structural bottlenecks that are fueling, that is fueling our own inflation, and that is what we need to address.
So,
if we have
it's more
this
of a
bottlenecks addressed, I think we might see a continued spate of low, disinflation. Because if you look at the US, quite right, inflation is elevated, but then you see that, they don't have some of the bottlenecks that we have around FX, around capacity
they have,
around infrastructure,
Michael,
for manufacturers and all of that. So in the case of Nigeria, I think it's the structural bottlenecks that are our home problem, not really the fact that, we have an inflation problem.
Michael, what I was trying to understand from your own analysis is that, so what you're saying is that it's local. We have a local problem because of structural bottlenecks. That's what you're saying. So if we address the structural bottlenecks, I assume that, like security and some other issues, inflation will moderate. Is that what you're saying? So we shouldn't be categorized among countries that have an inflation
because
problem.
To be honest, the best way to analyze inflation is to understand the dynamics of the country you're analyzing, right? Quite right. Inflation is everywhere right now. But the truth is, for you to really diagnose it, it's important to understand what exactly are the dynamics in Nigeria. And just like you had, just mentioned, there are some salient factors in Nigeria that are peculiar to us. Insecurity. You have the fact that these days, if you're trying to bring, for instance, a truck is coming with tomatoes from the north. I mean, there's a super scare because they might get robbed by terrorists, by bandits, and all of that. You don't have that in some of these developed countries. So if we pay attention to our own peculiarities and address them, I think we might be able to find a way around, the inflation, that we are expecting that may take the uptrend very soon.
You know, Michael, we have less than 5 minutes to go before I get on to the next interview on cooking gas and domestic gas outlook for the year. If we take a look at an average of what inflation did in this country last year, I had to pull out my calculator this morning, and I got the figure 16.98%. That's the average for 2021. Just like you said earlier, it's not, we are nearing the levels we were before, because we opened this year, I think, about 16% or thereabout, and we hit about 18% in 2021. I beg your pardon. We are actually going to food inflation still high. The president is unveiling rice pyramid as I speak right now here in Abuja. The rice pyramid, I know perhaps you would have seen it in the news a couple of days ago. How do you think that it will impact food prices, especially the staple rice, which we eat? The Central Bank of Nigeria said that we are now the biggest producer of rice in Africa. But many Nigerians are still of the view, we can't get this, it's not affordable, which I've raised with the Central Bank of Nigeria a couple of times. And I hope to also raise it with them again. With what we're seeing now, 13 rice pyramids here in Abuja, how is that going to alleviate the problem of food inflation, especially that rice is in you know, the basket of food?
Nancy, I think the simple answer to what you just said is, how about we have 13 rice pyramids in each of the 36 states? So
Okay.
the idea of food inflation, the best way to address food inflation, number one, is to make sure that you have food security in your country. You know, food security, you know, it's not just about food production, it's also about food accessibility. So you're not just producing, but you're making sure that what you're producing is cut across all the states in the country. So it's good. I mean, I love the fact that yes, the CBN has been intervening. I like the fact that yes, they are launching a rice pyramid. But the truth is, it's really not going to solve our problem, because 13 rice pyramids in Abuja alone, for me, it looks like what happens to the remaining 36 states. Why not have, you know, pyramids in each of these states? That's actually the way to drive, you know, domestic production. So I don't think it's going to solve a problem, you know, just like you said. And I mean, you also have to consider the fact that, you know, competition from import is still a very valid concern for us. You know, as much as the government is trying to, support domestic food production, they must pay attention to, you know, how to, substitute these imports, you know, and make sure that we achieve, more of domestic production. And this has to cut across each of the states. You know. So the idea, I think, is to now begin to focus on a spread, a geographical spread of rice production or food production, instead of just looking at the particular states.
Okay. Michael, last question. The MPC would meet, the first meeting for this year, I think, in a week from now. What do you expect, and what kind of choices do you think before them? Don't forget that the last time they did, they tweaked the interest rate was, I think, September 2020, when they brought it down to 11.5% from 12.5%. So what kind of choices are before Emefiele, who is unveiling rice pyramid now? When he goes back to his office, he will go and face that inflation has increased. And I wonder what they will do, and what's your outlook for this year moving forward, especially, that is your inflation outlook, especially as intra-party campaigns have started. We're seeing, it's not subtle anymore. Most programs you see now is about politics, and it will take just the grace of God to pay attention to the economic side. But trust us, we'll be here monitoring what's happening in the economy as the day go by. So what's your inflation outlook? What kind of decisions do you think the MPC would make as it concerns inflation rising and intra-party campaigns have started?
Yeah, I think the odds, you know, I mean, it's in favor of hiking rates. But I don't think the CBN will make any move at the MPC meeting that will be held on the 24th and 25th. I think they will still hold their gun and probably, you know, see if, you know, we will have this sustained inflation. So my best bet will be that even if they're going to hike rates possibly in March, and that will be dependent on if we have, you know, a sustained inflation over the next 3 months, January, February, and March. That will be my view for MPC. For inflation outlook, you know, for the rest of the year, I think it's safe to say that yes, we might at some point in time. I think we've gotten to an inflection point, but I would also like to see, you know, what happens, you know, next month. I think if we have, you know, if we have a sustained uptick next month in inflation, it's safe to say that we have crossed the inflection point that we might expect to see elevated inflation, in 2022. And again, the base effect will no longer be there by the end of March. April, going forward, April and beyond, we most likely will not see the base effect. So I think that, inflation might be somewhat elevated on average in 2022.
Okay. Thank you very much, Michael, for joining us today. Michael Ogunremi is a macroeconomist and fixed income analyst, so you've heard it from him.